You know, last what was it? Monday was Claude's birthday, so last Monday.
Yeah. And
We got something that I don't want to make y'all feel bad, but my brother's an excellent baker because he likes to analyze things. And once he figures something out, he can do it. He brought this by a little while ago. I'll lower this.
oh my gosh.
It's a
Okay.
coconut cream pie, which is our dad's favorite.
Yeah.
So we'll, out of homage to dad, we'll do that. And this,
Oh my gosh.
he made that, and that looks like a professional bakery.
Yeah, man, that's
Once
the
he
brain
figures
of-
Doesn't surprise me.
Yeah.
That surprises me.
that's a beautiful pie, man. Gee.
Yeah, well, it will taste remarkable, but once he figures something out, because he's that way. He's been this computer tech guy just forever, and more than that, and whatever it is.
That's going to have a short shelf life at your house.
It won't last long. I will share, but it won't last long. That's right.
Yeah.
It's just remarkable. Just
And
remarkable.
I hate that we didn't get to celebrate your birthday, but I don't feel too bad because we've done it about 12 times this year.
That's right. That's right. I had 3 birthdays this year. It's not a problem. I really am in my 90s now by the calculation from the number of birthdays I've had here.
Yeah, for sure.
Yeah. You want to go and get started, Mike?
Sure, we can jump
Sure.
right in. Let's talk insurance. So, I guess welcome everybody. We're with Bray and Oakley today. We're going to be talking insurance, specifically investment and rental property insurance. Fellas, if you don't mind, take a second. Quick introduction on who you are. Go ahead.
I'm Michael Winter with Bray and Oakley Insurance Agency.
I'm Claude Singleton. I'm the manager of Lexington and Richmond offices in Kentucky.
And I'm Danny Crum, and I'm the sales manager with Bray Oakley Insurance.
Great. Great. Well, gentlemen, what is considered investment property? The people are dying to know.
Well, investment property or landlord policy, which we refer to in the insurance world as DP 1s, 2s, and 3s. That is property owned by the landlord or the investor per se. That is occupied by a tenant, which we talked about last week, tenants policies. And so there's a little different coverages there, some different things that happen. We still protect the asset of the owner or the investor, but there's some different policies and coverages and endorsements that go along with that, Mike.
And the big deal on it is this investment property is usually one that they're not living in because it's hard to live in one and flip it or whatever they're going to be doing or renting it to someone else. So it's a non-occupied property. So there's special insurance things that have to be taken care of. And it's part of our questions that we ask. And sometimes people will wonder, why are you asking all that stuff? It changes the risk if a person lives in a home as a normal home and lives there and all the time. It's a different kind of risk than if it's a non-occupied home or if it's a home occupied by someone renting. And so it's a big deal. Big deal. We have to define that carefully.
And that's a good point too. It makes a pretty big difference if the home is actually occupied or not. Is it a vacant policy or is it actually occupied by a tenant of yours? So that's a good point.
A lot of homeowners policies, they actually states in there, it must be owner occupied. So that's a big deal. So your homeowners generally isn't going to respond to a dwelling fire or landlord policy. So we always encourage our clients to let us know as soon as a home is no longer owner occupied, so we can make the appropriate changes and put them with the appropriate carrier with the appropriate policy.
Yeah, our big deal, and I think it's really good philosophy that Bray and Oakley has, is that we prepare for claims. When we're writing the policy, when we're quoting it, we're actually assuming that there could be a claim from this, as opposed to, wow, this is a wonderful sale. No, this is wonderful coverage that we're going to be providing because a claim will happen. It happens, and I've said it before, every week we'll get a call that comes in and they will say, I can't believe this happened to me.
Yes.
But, and the next thing out of their mouth is going to be, we had a claim, we had something happen. Well, that's what we prepare for. And the philosophy, a very good philosophy with writing policies here is we're going to be looking at claim from the start, claims perspectives from the start. So coverages, make sure you're aware of what extra benefits you can have. And if you choose not to have them, just sign off on those. You don't have those coverages. It's a big deal up front. And the people like that. It's comforting. And we spend a little more time going through stuff because of that, but it's a comforting thing to know, man, I'm better taken care of.
Absolutely, 100%. And in most cases, but not all, and I think Claude and Mike will agree with this, but in most cases, we've got the primary home insured for the client before we ever get into the dwelling policy or the landlord policy. So it makes it a little easier. But for new clients that call in, we always make sure we go in depth on those questions. You know, all right, we got the home information now. How's it occupied? Are
Yeah.
you living there? Is someone renting off you? Is it vacant? Are you doing major renovations or minor renovations? All that stuff matters as well.
Yeah.
I've heard you guys say it a couple of times, but it always cracks me up whenever your customers call and say, you're not going to believe this, but I'm going to have to file a claim, or, you know, it's like, what's the point in having insurance?
Yeah. But a lot of people just assume, okay, I got to pay it's a bill. That's not going to happen to me.
Yeah.
There you go. It did happen to you, didn't it? Here's your sign. It did happen to me.
And we don't like surprises. That's why,
No.
that's why we do the underwriting we do.
That's right. Christmas and birthdays. That's our surprise. Don't surprise someone. We're gonna say, yeah, here we go. Here's the coverage. You know, you already have.
Speaking of birthdays, didn't we just have one, Claude?
Yes, we did. We did. I'm now 50 something. It seems like.
You look good for your age.
Thank you.
That's the 7th or 8th time this year, Danny.
Yeah, I think we just celebrated about 2 weeks ago. As a matter of fact. Good stuff.
I heard you guys mention a little bit before. I think Michael, you had mentioned what's the primary difference between homeowners insurance and landlord insurance?
Yeah, that's a good question. And you know, one of the main things is that you get into on the homeowners policies and the landlord policies is contents coverage. Okay, so just like we talked about last week, we talked about tenants policies. So on a tenants policy, you're actually renting the home you're living in, but you don't own the structure. You just own your contents on the inside. So you're wanting to insure that, right? Well, on a landlord policy, it's kind of the opposite. You own the structure, but in most cases, you don't own what's inside. So whoever is renting from you will carry a tenants policy and you carry the policy shell. Now, there are a lot of cases where we will add some personal property or contents coverage to a dwelling policy. And I refer to it as dwelling policy because that's the insurance terms for it. Landlord policy, dwelling policy, same thing. But, you know, we'll usually put $5, $6, $7, sometimes up to $10,000 contents coverage or personal property coverage to take care of anything that's not bolted down, just like we talked about last week, which would be the refrigerator, stove. Sometimes they'll furnish the apartments or the homes with couches and things like that. So again, that just comes down to having that conversation with the customer and being very detailed on what we're looking at.
And a big deal with that conversation is we are not insuring the renter's contents. We're insuring just the stuff that the landlord owns.
That's right.
We're not taking responsibility for that stuff. So if he does have a furnished home, which would be the furniture and all of that, well, that's covered. But the contents that the fellow brings in who's renting from this landlord, no, we're not covering that. That's a different, separate renter's insurance policy, which that's what we talked about last week was a renter's insurance policy. That's a good thing to have.
Absolutely.
Well, one big thing, you know, you want to mention here is you have to have insurable interest to insure something. And, you know, the landlord doesn't own the tenant's property. So, you know, it's like me wanting to insure my neighbor's house. Well, I don't own that house, can't insure it. And it's, you know, like for a landlord, he's not going to be able to insure the contents of his for his renters because he probably knows little how much they have, what they have. And he has zero insurable interest in that. So,
Nor would
that's
you
a
want to
big
be
point.
responsible for that. Right.
Yeah. So is there any circumstances at all where a landlord policy would cover any of the tenant's property?
I can't think of one because as Michael was saying, the ownership is a big deal and the insurable interest. The contents of the house, if it was a furnished apartment or a furnished house, those contents owned by the owner would be covered by that owner if he chose to have them covered. And that is one of our questions, of course. Do you need also personal property inside there? Do you need contents inside there? Yes, I'm furnishing it. Okay. How much would that be? And that'd be the limit. That'd be the limit. But it would not be protecting the renter guy for that, for his personal stuff that he brought in, his clothes or televisions or whatever he's got bringing in.
There's different claim scenarios that can, possibly maybe trigger something like the liability section of the landlord's policy. Does provide bodily injury and property damage to others, but if he's deemed negligent, maybe there might be an opportunity that the liability policy might provide some sort of property damage. But it depends on the claim. I mean, the best way to make sure it's done is make sure your tenants have renter's insurance and to cover those things. So,
Yeah, which we talked about last week, and is why a lot of landlords now are requiring the tenants to carry a renter's policy. And if the audience has missed that, our last week's video talks about that in detail, about the difference between owning the property or the contents and renting. And so again, that's why a lot of landlords now are requiring their tenants to carry a renter's policy, which would provide coverage for their contents, as well as provide some liability coverage as well.
Sure. So this isn't necessarily on our written, questions requested, but I know last week when we talked about renter's insurance, you all had mentioned like a loss of use that was included for renters. Is there some type of, loss of use for landlords if they, happen to lose their tenant? Maybe it's a long period of time, maybe a fire or something. Is there anything that can help those guys recoup some of the money as far as, rent or something that's being lost?
Yes, and that's a very good provision. There is a loss of use, loss of income from that. And that would be part of the claim process, and that it would have to be approved and all that stuff. But
Sure.
yes, that is part of the deal, because that is an income producer, and a covered claim that rendered that house not livable. That's a problem. That's a very good question, Mike. Very good.
Very good. Yeah, absolutely.
Awesome. So I know that last week you said as well for renters, when they have their own renter's insurance, that they should be taking inventory, video or something like that. Is that something you would recommend for landlords to do as well? If they're furnishing the house with appliances or furniture, is that something they should do as well?
100%. And that's a good question as well. What we do as an agency, of course, is we go out and inspect every property that we insure, right? So we're going to have photos of the outside of the home. We're going to have measurements, we're going to have pictures of the roof, all that good stuff. And that's going to be in the client's file within the agency. But anything the landlord owns on the inside that we do not have access to, yes, we absolutely recommend that they take some photos of that and ask the renter to do the same for their property as well. Very, very good question.
Awesome. So let's see here, our rental and investment properties appraised the same as personal homes?
Yes, as far as the structure goes, because what it is, a lot of these insurance companies now use valuation tools like Marshall, Swift and Beck, or an E2 value or something like that. And what that is that's a replacement cost tool, and it also will calculate actual cash value, stated value, and that sort of things. And that is based off of the year of the home, the dimensions of the home, which is the square footage. Is it a 1 story or 2? Is it brick, veneer, vinyl siding? What kind of roof, porches, and things like that? And it will give you a valuation. But yeah, a homeowner's and a dwelling policy will be rated the same on the replacement cost on coverage A of a policy.
Because the big deal on that is not the function of the house, what it's being done for, but to rebuild it in whatever zip code you're in, because they're that's specific. Those wonderful tools that Danny was speaking of, they're specific to zip code. What's the labor cost for that area? It's all built in. So we'll plug in dimensions and type of home and condition, all that kind of stuff in there, and it's wonderful how that does that. And it takes quite a bit of time to do it right. And often we will have a different value than what if someone has gotten a quote from someone else. We'll have a different value for the home, and often it's a higher value. And I've had clients or prospects who eventually became clients that, Yeah, your number was much more accurate for the way I was concerned. They took more into consideration because we do look at stuff because you want to have your house rebuilt or your investment property rebuilt like it was. You don't want to have to take 80% of it or less of that house to have it back. That's no good. Yeah, if you have a claim, you want to have it covered right. And so we do that carefully, very carefully.
Yeah, absolutely. And another thing is a lot of times, not always, but most times you'll see the replacement cost value of the home come back different from the market value or what maybe the client purchased the home for. And that's by design because rebuilding the home and purchasing the home has to do with, how's the market right now? The market may be, like Claude said, zip code. It may be really good in Lexington, but in West Virginia and Logan, it may be down. So the replacement cost value and the market value is completely different. And that's a question we get all the time is why is that coming back so different? Well, it's replacement cost. We're replacing that home at today's values or whatever the Marshall, Swift and Beck or E2 value, the valuation tool comes back and it stays. So here, here's approximately what it's going to cost you to rebuild this home if something happens.
Yes. And here's an odd thing. On occasion, that rebuild value will be higher than, say it was a new house they built 2 years ago. And he says, well, that's higher than I built it originally as a brand new house 2 years ago. Yes, because the rebuild value also has tear away parts. That is, the building was destroyed. Let's say it was a fire or a tornado or something. And in my examples, no one has ever hurt. So the family was not there, but now they're going to have to rebuild it. Is it 100% clean ground? No, it's not. It's got walls. It's got different things in the way. So before you can actually rebuild that house, you got to tear that away. That's not free. So the rebuild is actually often more expensive than the original build. If the original build was just a few years before, then you can see the difference there. But the big deal is, where are they now? Where do they want to be in the future after this claim? That's where we're here to help. And that's why we're so careful in what we do. It's a big deal.
That's great. And that's kind of the behind the scenes stuff that, our clients don't see, but that we take into account and the insurance companies take into account to make sure that all the stones are turned and all the bases are covered. Good stuff.
Yeah, I have a friend that works for one of the local restoration companies, and he tells me all the time about how much it costs to clean up after a fire. I think you had mentioned on the flooding podcast that, when you get water claims, how, gosh, it just seems like they continue to grow and what seems like maybe a small kitchen remodel. Now you're remodeling the whole first floor of your house because you didn't know the mold got into your air vents or something. So.
Well, yeah, just think about it. I mean, if you have a fire loss, what has to happen? I mean, okay, the house is not livable. So someone's got to come in and tear it all. If it's a total loss, tear the home down, dispose of it, clean it up, and do it by code the way it's supposed to be done. It gets really expensive. Absolutely. Really expensive.
Pretty fast.
Pretty fast. Yeah.
Yeah. So I know
labor costs are going out the roof right now anyhow. So,
oh yeah.
I think the harder job is trying to find someone to actually show up and do the work they promise they can on a timeline.
Yeah, absolutely. And is insured and that, all that good stuff. Yeah.
Yeah.
That's why it's always good to look at your policies, like even like what we talked about, loss of use. Some people put a dollar, there's some carriers that put a dollar amount. Some people say carriers, not people, but carriers will say 12 months or 18 months or 24 months. Those numbers are pretty important these days. So it's always worth, having come in, let someone look at your insurance policy and doing a review with you. So.
Sure. Yeah. Seems like it's taken 12 months just to get something, come in from Lowe's if it's not directly in front of your face when you pick it up.
Oh, yeah. It's crazy.
You guys were starting to touch on it a little bit, but are there different kinds? And if so, what are the different kinds of landlord insurance?
Well, you've got different policy forms. I call them it's dwelling policies. So in most policy forms, they're rated as DP1, DP2, DP3, and each one of those numbers means something. From an actual cash value standpoint, with I think it's 9 perils covered on a DP1, which a DP2 goes up to 18 perils, and your DP3 is your broader form. It's a named peril policy. So those forms all mean something. It really just depends on the client, where they're at, what they want. Do they have a loan on the house? That's a big deal too. If you've got a loan on the house, a lot of banks will require a replacement cost policy, which we've talked about, meaning that, we're going to replace the home at today's cost. Some people that own the homes, maybe older homes, and they don't have, as much money in it. Sometimes they'll want maybe a little less coverage, and they'll opt for a DP1, which is an actual cash value policy. And you can pretty much state what value you want on it. But doing that, again, you're losing 9 perils from a DP2, and then a much more comprehensive policy from a DP3.
Yeah. And so that's part of our question is, where's the home located and what kind of a policy would you like? And we'll put it in terms for them to understand with, if it needs to be a simple policy with, few coverages and all this stuff, or do you want to have the replacement? We start off with wanting to do as much as we can for people. We do recommend the replacement. But if they say, well, really, this is a house I inherited. It's just a little house and there's not much to it. It does not have very much value and I don't want to put much into this. And we'll define that with them. That's the DP1 that Danny was speaking of. We'll define that with them. Do you want just this simple, you might call it fire coverage, and it doesn't have all the other bells and whistles? Do you want that? If that's yes, right now that's exactly what we want. It's just nothing much to cover. And so if that's the case, a small house and small exposure for them, and they can choose that, that's fine. But we will help the person to understand the options. As Danny was saying, the different kinds of DP, the dwelling policies, and we want to make it fit for that person, not based on what I might think of it, but how they think of it and how they're educated with our discussion. Then they can really make that choice better. It's wonderful. But anytime people want to do replacement, we're ready to do that.
Yeah, and something Claude said there is educated, and that is really what helps us and the customer determine what they want and what they need, is by us educating them on what these policies do. We don't just throw a number out there and say, here's your policy. This is the least expensive policy we can offer you. It will do what you need. Let's move on. We don't do that. We want to sell you the best policy. We present you the Cadillac at first.
Sure.
And then we go from there. So, absolutely.
So one of the questions that was asked was, are there optional coverages or riders that I should consider as a rental owner? So it sounds like you guys answered some of those. Anything you want to add to it?
Well, again, these different bundle packages and endorsements are kind of really just, I call them the bells and whistles to the policy.
Sure.
With every policy, you're going to get coverage A, dwelling coverage. You're going to get the contents, personal property, other structures, liability. And then those are your basic coverages that come with any homeowner's policy, dwelling policy, landlord policy, whatever you want to call it. And then we can go into these bundles and we can add things like Mike was talking loss of use, different bundle packages. You can start at 12 months with some companies, go all the way up to 24 or 36 months. Siding restoration, if part of the siding is damaged, trying to match the siding back up. If not, we'll go the insurance company will agree to go ahead and put all new siding on the home and things like that. And again, that's going back to Claude, educating the customer and going over these, tailoring the policy to the customer's needs and what they would want, if they do have a loss. That's what we do. We want to make sure that if you have a loss, you call us and we've done the best we can and you're satisfied.
What you said there about tailoring was right on target. That's right on target. I've got an example of that also. Earlier, Danny mentioned, are you doing fix up and all that kind of stuff? Let's just say there's major renovations you're going to be doing to your house. There's a lot of building materials on site. Is that covered? Well, let us know. Let us cover it. Let us work through the details with you. It can be covered, but right. Depending on the policy, it may not be covered. And so you have a theft, a mysterious parts just walked away over the weekend. How's that happen? I don't know. They've got talent. They've got legs. Well, let us know. Let's walk through that stuff, because that's one of our questions. If there's going to be major renovations, how about that coverage? So that's another option. It's on a policy that if you don't have it on there, you may be lacking. Definitely.
And we can even get as detailed as the shrubbery and the the stuff around the home, the landscaping and things like that within the policies. With some companies, they'll offer more limits for things like that. So we can really get pretty specific on what the customer wants or what the customer needs.
Awesome. So I guess, how can B&O help investors and landlords with their to get proper coverage?
The best thing probably would be allow us to have a conversation with you. And if you will share with us, if the client will share with us their current coverages and limits and things like this, we will go through and itemize things and say, okay, right here, we can do this and this and this. And we make these recommendations. But it just starts with a conversation and getting acquainted. And then often they will hear questions that it's possibly not heard before. We're wanting to find this with them. And when they hear why we're doing it and see where we're going, it's normally very much a welcome conversation. And they feel better about it. And in addition to property coverages, which they'll feel better about, usually when they talk with us, they're better off on their liability coverages as well. Because the building is not just a building. The building is a risk that he can be sued for, that client can be sued for, he or she can be sued for. Someone cutting across the property or having a loss inside there and getting themselves hurt. Well, that's where we come in with that liability part. And the liability can be much higher than the value of the home because that exposure is there. So we want to protect the assets of that investor, of that client. And we'll talk about that as well. Just what kind of liability we need to talk about. And those are good questions.
Yeah, something that, we've mentioned over and over again that we do here is, we look at our homes that may seem like a small thing, us going out and looking at the homes we insure, but a question for the customers is, has your current agent ever looked at your house? Do they know what you have?
Yeah.
It's a big deal. It's a huge deal. If your agent has never came out and looked at your home, then there's a good chance you may have some lapse in coverages, or your home is not insured or evaluated correctly for the policy form. And a good example of that is, do you have a basement? How's the home rated? Is the home rated with a basement? Is it rated with a crawl space? Is it rated with a slab? And all of that stuff matters. And that stuff on the back end that, may sound minute to our customers on the phone, but it makes a big difference when we are insuring your investment. 100%.
Well put.
Well, outside of renter's insurance, and not to cause Danny too much mental anguish, but how do we think WVU is going to look at Kansas this week?
Guys, I'm going to have to go.
That was good. That was good.
Sure.
Yeah. From the UK standpoint, we're playing Florida this week at Florida. That's always a challenge.
Yeah, I'll be watching that game. It'll be good.
Oh man, it's what maybe the biggest game of the
Yes.
evening because they're both two ranked teams.
Yep.
Yeah.
But the last few years have been much more exciting around here for football than they were prior, and the big streak that Florida had with being undefeated, winning all these games for all these years was crazy. Well, now we don't have that streak anymore. They don't have that streak against us anymore. So hopefully it'll be an exciting game.
Yeah.
And hopefully we win, to be clear.
Yeah. It's one of the only times I root for UK, Claude, when they're playing Florida. So I'm just saying.
Well, good. I'm always glad to hear when you're thinking clearly. Hey, y'all were so nice to me some years ago. When,
No, they playing in Florida or Kentucky?
at Florida.
At Florida.
Yeah.
Maybe we get Bray and Oakley to sponsor some box seats for Claude to go down.
If Claude goes,
Hey, boss, I can expense that out, sir. I really can. I can expense that out.
Yeah, if you take Danny with you, it could be a team building exercise.
It's the rules. It's the rules. If Claude goes, the sales manager goes with him.
Michael and Danny were so nice to me a few years ago. I love basketball. I absolutely love basketball. And our basketball team lost. It was a bad loss. And both of them were so nice. They did not razz me. And I'm so thankful. Because I wasn't getting blown up with texts, Saturday night. Hey, Claude, what's going on? Oh.
I'm glad we're putting all this off on you, Claude, because it took the original question completely off. So.
I got your back, pal. I got your back.
Yeah, thanks, buddy. Thanks.
Yeah.
Shoot. Well, gentlemen, if somebody needs to get a hold of somebody at Bray Oakley, what's the best way to do it?
Again, our website is www.brayoakley.com. You can reach all of our locations there. Each location's phone number is posted there. You can reach us on social media, of course. And you can call any one of our offices and you'll always talk to somebody with Bray Oakley. You'll never get an operator in another state or county. You're going to talk to the people that take care of you.
And it's possible in the post-recording phase that you might be able to put a phone number right here, maybe floating across the screen.
Shoot.
You gotta be a good idea, Claude.
Yeah, oh yeah. Cover my face, please.
Or we can give you Claude's cell number. That number is
Well, you might hear the answer in Spanish. I might change that up a little
I
bit.
tell you what, we'll give him Clint's.
That'd be good.
All right, well, gentlemen, you guys have a good day.
All right, thank you. Appreciate it. Pleasure.
See ya.
See.